What's going on, everybody, and welcome back to the channel. So in today's video, I'm going to be talking about a new stock on the channel, and that is Splunk. Yes, you heard that right. If you haven't heard of this one, it's called Splunk, which I don't know who came up with that name, but we're going to go with it. It's ticker symbol SPLK, and this is actually another company that ARK is adding in their Disruptive Innovation ETF. Now, this is another one that popped up on my radar when I was going through the ETF's holdings, and what I wanted to do really was give you guys this video of what I found in my initial research. Now, I do have a ton of DD to do on this one, but I wanted to share my initial findings with you guys so you guys could decide whether or not this is something that maybe interests you and that you want to look further into. All right, so the format for today's video is going to be broken up into four main parts, with the first one being the stock price, how it's performed, and what analysts are expecting for 2021 growth. The second part of today's video is going to be about the business overview and what some of the key segments of their business is. The third is going to be about the financials, so we'll be taking a look at the income statement and the balance sheet. And then the fourth and final segment is just going to be really a brief overview of their valuation and how it compares to one of their other competitors. And as usual, I will have timestamps down below in the pinned comments, so be sure to check that out if you want to go to a specific section. And really, guys, if you feel like you got some value from this, please be sure to give this video a thumbs up and subscribe to the channel, because it really does help with the YouTube algorithm. And I'm sure you hear this with all the other YouTubers, but it really is a true fact that showing that kind of engagement does help push my videos out to more people and gives the channel some more exposure. So if you guys like this video, that really helps a lot. Now, with that being said, let's get right into it. All right, so looking at how Splunk stock has performed over the last few months, they are currently trading at around $200 a share, which gives them a market cap of about $32 billion. Now, over the last 6 months, they are up less than 10%, and even if you look year to date, they are only up 30%, which is right in line with the NASDAQ. And to be honest, this is actually pretty refreshing to see, especially if you're someone that's been wanting to get into this stock for a while. Now, I know personally there's a lot of stocks out there that I either wanted to start a position in or just started my initial position that by the time I knew it, the stock was up 50%, even 100% in some cases. So to see a stock that hasn't exploded upward like most other growth stocks is actually pretty refreshing, and good to find that there are stocks out there that aren't trading at incredibly ridiculous valuations, which we will get into, so stick around. Now, looking at what the expected growth is, we can see that analysts are currently expecting Splunk stock to grow revenues by roughly 25% next year, which would translate to about $2.9 billion in 2021 revenue. Now, any company like Splunk that's growing revenue by over 20%, I would consider to be high growth, but there is a caveat to this that we will get into in the financial segment of today's video. So with that, let's get into the business overview. So essentially, what Splunk provides is a platform that businesses can use to search, monitor, and analyze machine-generated data through a web-style user interface, which allows for massive amounts of data to be broken down visually in a way that's both effective and efficient for the end user. Now, this data is generated using artificial intelligence and machine learning, which allows companies to quickly and effortlessly pull up visuals like charts and graphs, which makes analyzing the data a lot easier. So it's definitely a useful product, especially for large corporations that log millions of data points that they then have to go back and analyze to improve things like products and features. Now, in addition to this data analyzation tool that they provide, they also have cloud solutions, which is actually growing incredibly fast. We can see that annual recurring revenue for their cloud solutions grew by 89% year over year, and over the last 4 quarters, they have consistently grown revenues for this segment by over 80%, which is just insane. And by now, we've all heard about the top cloud companies growing revenues by 40, 50%. But when you compare Splunk to its competitors, they are growing much faster, with the top 10 public cloud companies that are doing under $1 billion in annual recurring revenue growing at around 48%, while Splunk is growing 2 times as fast. So this is definitely a high growth segment for them, which I will touch on again when we go through the financials. Now, one of the things that I really like about Splunk as a company is that they have a diverse customer base from almost every industry. That includes 92 out of the Fortune 100 companies like Zoom, Slack, Salesforce, Google, Lockheed Martin, Qualcomm, and the list goes on. So the fact that their product solutions are being used by companies around the world should tell you that what they provide brings tons of value for the companies, and I do expect more and more companies to quickly adopt their platform. Alright, so we have a lot to cover here in the financial segment, so what I want to do is start with the income statement and then we'll move to the balance sheet. So for the first 6 months ending July 31st, revenue actually decreased from $941 million in 2019 to $925 million this year. Now obviously no investor wants to see shrinking revenues because that means growth may be slowing down, and that's pretty much the opposite of what you want in a high growth stock. But when we dive deeper into the revenues, you can see that it's broken up between mainly licensing and cloud services. So what we can see here is that there was a substantial increase in cloud services revenue, but a drastic drop off in licensing revenue. And this is because they are in the middle of transitioning from their original licensing based revenue to their new cloud service revenue model. Now, obviously there is a tremendous amount of growth in their cloud services, which we talked about earlier. So I do expect this transition to continue into future quarters. But at the end of the day, this transition, I believe, will hurt their top and bottom line numbers. And it really will depend on whether or not they can grow cloud revenue faster than they lose licensing revenue. So this is something that I will definitely be paying close attention to when they report their next quarter earnings in just a couple of weeks. Now, looking at their expenses for the first 6 months, this is what honestly gives me the most hesitation about this stock, because right now they are taking a massive operating loss of just over $500 million, which is more than 50% of their total revenue. And when you break this down, we can see the bulk of this is coming from sales and marketing, which was a $640 million expense, followed by their R&D expenses of almost $400 million. Now, the reason this concerns me is because sales and marketing expenses grew by $65 million, but revenue decreased by $15 million. So this makes me wonder if those marketing dollars are being used in an efficient way. Now, obviously, I'm not an expert marketer, but I would like to think that if you increase your marketing budget, that revenue would also increase as well. Now, as you could imagine, this massive operating loss ends up trickling down to the bottom line, which left Splunk with a net loss of $567 million for the first 6 months, which is more than a 100% increase from 2019's $250 million loss. Now, in case anybody watching this video is new to investing, that is a double up that you do not want to see. You definitely don't want to see a company lose double the amount of money they did the year prior. So the income statement definitely worries me quite a bit, but I can promise you the financials do get better. You just have to look at the balance sheet, which when you look at it has almost doubled their cash position to about $1.5 billion in cash and cash equivalents, and almost $600 million in short-term investments. So add this all up and they are sitting on just over $2 billion of liquidity, which is a good amount when they only have $1.2 billion in current liabilities. And that's including deferred revenues in the liability, but if you remove the $760 million they have there, they are left with what I believe to be true current liabilities of about $470 million, which if they paid off all of their current liabilities would leave them with about $1.5 billion in liquidity. So they obviously have a really strong balance sheet. So looking at their valuation, since they are taking a massive net loss, I'm going to use the price to sales ratio and compare that to their main competitor Datadog. So as of today, they are trading at a sales multiple of roughly 13.2, which really isn't that bad when you compare them to companies like Datadog, which are trading at a price to sales of 49. So some might argue that this stock is cheap when compared to them. Now I know it shows them having a forward PE of 400, which is obviously expensive, but as we saw earlier, this company is not profitable and is actually far from profitable, so I can't imagine that they'll have any PE in the next 12 months, because as I'm sure you know, you need to have profits to have a price to earnings. So from a brief valuation standpoint, it does look like they could be undervalued or maybe even fairly valued, but that's really up to you guys to decide, and your own due diligence needs to be done to make that decision. So Splunk is definitely a stock that I will be adding to my watch list, because I know from personal experience, when you work for a large company, there are so many data points that you need to track and follow and then analyze. And having it all in one place, especially in a web-like user interface, does make it a lot easier to find the data you're looking for and then also analyze it. Plus, on top of that, we all know that cloud solutions are booming right now with the whole Rona era and everybody working from home. So I do feel that this is a stock and a company that will benefit from this movement. So I hope you guys enjoyed today's video. If you did, be sure to drop a like and subscribe to the channel, because I do put out 2 to 3 videos every week covering some of the top stocks that I'm watching and also stocks that you guys want. So with that, thank you guys for watching, and I will catch you on the next one.